This is Rod Kusin and Spooman for Risk. This is an educational video designed to look at the subject of naked bars and the value that they can present for the trader. Now, a naked bar using a 5-second chart is defined as a single pivot bar where, of course, there is no divergence on the premium, and where in fact the premium is predictive of a return to this price. Now, the best way to really explain this is by way of illustration. And we're going to show you how you can use this kind of system to really generate some very effective trades. So what we're going to start with is a couple of examples of naked bars, and then look at some examples of what is not a naked bar. We are going back to November the 3rd, and you'll notice that right in here we have this single bar at 2094 associated with this low bar on the premium at 506. This is a naked bar for various reasons. Number one, the premium is showing up here as lower than all of the recently preceding bars, and because there is no divergence on this bar, in other words, it's not a higher low, but it's in fact a lower low, it is predicting a return to that price. The very next time that price is hit, we have another naked bar. But now the premium is even lower, and so now you know that the market is going to be dropping to at least this price, if not lower, at a subsequent time. Now let's look at this bar over here. This is a single bar. There is no other bar associated with that particular price right at that time, but this is a higher low. It's associated with this read at 581. And as a higher low, that's exactly what you would expect. A higher low on the premium, just like you have a higher low on the Spoos. So that is not a naked bar. But these two instances are predictive. Now, what can you make from that? All right. As the market is going up, you're looking for an opportunity to short this. Now, your first opportunity to short it is right here, where you've got a drop in the premium, and then it moves up from 96.75 to 97.25, so just a few ticks, and we're divergent again. So whether you get it short here or at 96.75 or somewhere in between, the fact is that you've got, you know, at least a 2.5 point drop here, and depending upon where you get filled, maybe even a little bit better. So you've got a 2.5 point move down the on the first occasion, and then as it moves right back up to the high, you get another divergence again at the same price at 97.25, and you know it's going to be coming down to at least 94. So now you got a 3-point move, and you've just made 5 points, you know, in the course of not even 15 minutes. That's a good day for a lot of traders. And this happens virtually every single day. So let's look at some other examples of this. We're just going to have to search through the day to find examples of other naked bars, other predictive bars. Okay, so here we have one right in here. Now, we don't get a lot of movement out of this. All right, moves up to 90.75, comes back down to 89. Okay, so what's wrong with you know, a 6-tick move? That's a very respectable move. Let's see what else we can find. And nothing else really stands out at the moment. Okay, nothing yet. Now, let's talk about this up here. This is not a naked bar because the premium bar associated with the pivot is 469. Okay, it's divergent, so that's not a naked bar. Okay, but this is right over here. Whoops. Let's come back to that. So right in here, this low on the premium associated with 2086 moves up to 2088. You become divergent, and you've got another potential 6 to 7 tick move out of that, depending upon the fill. But you're exiting the trade at that price or less. So you can usually set up a limit order and have no problem getting filled at the price of the naked bar. Where you get filled to execute the short in this case, that's another story. But in this particular case, it couldn't have been any better than 2088, probably a little less. Now we have a high. Let's see here. Yeah. Okay, we got a high naked bar here, associated with that premium at 449. You're at 2088. You're going to go long on a divergence. Okay, so you might go long here at 85.75 or at 85.25 down here where there's even a little bit more divergence. So you could average in on that trade, and you're looking at again an easy 8-tick move. That's an easy 8-tick move. So quite a few examples of this on this particular day. All right. Okay, and that brings us into the close, and really nothing else here shows. Let's go to the next day. So on this particular day, maybe 5 different examples of naked bars, probably all averaging at least 6 ticks, 6 to 8 ticks. That's pretty good. Ooh, this looks good. No, I'm sorry. Unfortunately, that's not the case here. All right, here we have a good example, right up here. High at 2089 is being predicted by this bar at 418, so you come down and look for a long trade. You've got some divergence right there. There you have it, 86 back to 89. 3 points. And it comes right back up. Let's look for some other examples. And we're really looking for more obvious ones. Here's another one. Right there. 2090.50. Market continues to drop. It's associated with this high. That's out of place. Comes down. Oh, is that a divergent bar? Well, that's also a naked bar. Oh, that's an interesting one. Okay. Now you you get a very interesting situation here. Now you've got a naked bar indicating a return to 2087.50, and then another one a little bit higher at 87.75. So now the question is this coming down now, or is it going to come down later? And the only way you can really know that is to read the divergence on the premium as the market is giving you some higher lows, because both of these are predictive. So the real opportunity that you've got there is right in here. That's the only logical place to try to take a long trade here, because the others are predictive of a return to this price. So you get in here at 88.25, obviously not the best fill, 88.50 likely up to 90.50. That's at least being predicted. There's 8 ticks there. So you've done quite well so far just on naked bar trades. And so now what you're looking for is really a divergence, because you've got these two levels that are both predicting a return. In fact, really predicting a short is about to develop here. And we know that this is coming down because if you look at over here, when we were at 87, and you look at the premium, and you look at here at 87.50, and we're at a lower premium, that's predictive. Okay, that's just clearly predictive. And you're lower at 584 than you were at 578, and you're at a higher level, so that's predictive too. So this is coming down. So where do you look for this short? Well, likely you're going to say, yeah, we gotta get above this high. All right, that makes sense. That we should try to get above that high. And as we finally do race up there, then you can see, really even on this bar, that well, first of all, you would have gotten above 90.50 on the way up because you already expected that. And then you get this nice strong bar up here, another strong bar up there, so we're moving even higher. And so higher highs, higher lows, it's stepping up. Now all you have to do is look for the big divergence in the premium, and there it is. You short that, 94.25. You're going from 94 down to 87.5. That's a 7-point move, and it's all in writing. It's like a roadmap. It's that accurate. Now, is that what happens? Oh yeah. But it doesn't happen immediately. Okay. Now you short it there at 94.25, and now it's going to take some finessing to read the premium and make sure this thing is not going to take you out. So we should be getting lower highs and lower lows. So we've got this first point of reference here. We get a lower low on the premium there. So that's not an issue. We should have a lower low here. And it's close. It's actually just slightly a little higher. Then you get a lower low in here. But then you get a higher low there. And that divergence sends this thing back up. So, it's all right. So you take your profit. You shorted the thing. you made money on the way down. You just know it's going back up. You don't know exactly how high because you don't have anything predicting where that's going to go to. But you get divergent again at 94, so you have that next opportunity to come down. And come down you do. And then right in here you get divergent again and it goes back up. Well, all right, so you made some money on the way down. We don't know how much exactly, but Both shorts were successful. Your objective is to see this go all the way down. So you move forward. Finally, there it is. And you short that move up to 93, and now everything else really begins to take place as you drop into lower lows and lower lows even down here. So she comes back right to where we expected it to. And we do quite nicely on that trade. Really nicely. Now, nothing else on that day that really is outstanding. So let's move to the next day. All right, now on the next day, this was the big gap up, and you're really expecting that this is going to be a good day for a rally. So likely you're looking for long trades. But you get this initial move up, and you have a label here that's showing it as an overbought condition. Just because of the way in which the settings are set up, it shows up that way. It's really not. This is not really an overbought condition. In fact, it's a naked bar. And we're going back up to 21.1375. Now, it doesn't give us much room to work with. We become divergent down there, as you can see, an oversold condition. So, you're managing to pull, again, another 8 ticks out of this on that basis alone. Now, this bar over here, that's a naked bar. Okay, it was forecasting a return to 21.12. It did not prove to be working. This fails, all right? That bar fails. And that sometimes happens. But in any case, it's good to know, what is and what isn't a naked bar. In this case, it is. But now you do get a naked bar that you can short. This down here at 558, associated with this low at 21.2275. We only make it up to 24, and we become divergent. So you don't get much out of this. You get maybe 4 or 5 ticks at best. But as the market came back up to 24.25, it left you with a naked bar on the upside. Okay. So as this market then drops, you look for a divergent pattern, which is ultimately filled right in here. You go long, and you're getting in. The low here is 21.75. You're moving back up to 24.25. So you've got some good potential there for at least a couple of points or better. Okay. Nothing else outstanding on that day. Not too much. Let's look at the next day. Well, there at the top, very obvious. 24.25. You short, you go long. You've got a divergent pattern right in here. You're at 19. You're looking for 24. So you've got an easy 4 points or better on that trade. That's real clear. Beautiful opportunity too. And then you've got another naked bar up here at 24.75. So this move down, you look for divergence, you've got it right there. 22.25, you're going back to 24.75. You've got another couple of points there. Easy. Very easy. You got a little situation here, not much to work with though. 24.75 up to 26. Not much to work with. Now here you've got another situation. This is a naked bar due to the fact that it is a single pivot, a single bar pivot at 37.50, and then the premium is still considerably lower than anything else that you see here. So this can be shorted as it moves up, and we get divergent, and you've got some divergence right there at 40.5. So a nice 2 to 3 point move potentially coming down. And you got another naked bar right here at 34.25, associated with 449 down there. You short this thing up here at 37.50 because you got divergence down there. 37 down to 34. You got a 3 point move potentially. Got a naked bar over here at the low, 31.25, and that really produces. Now you may wind up getting in a little prematurely because you got some nice divergence up here, but then you become divergent again at the bottom, so you make a little money on that trade. And now it's just a matter of looking for the divergence, which is right there, and that helps get you into this. But unfortunately, it doesn't really materialize until the overnight market. So you're a little late in seeing this, but this is ultimately around 40 down to 31. My goodness, 9 point move, 10 point move, and that works out quite well, quite well. Wow. Okay, so you see the point here. Naked bars work. They're predictive, and they work. The probability of failure of these naked bars is so minuscule, as it is really a rarity for it not to work. Occasionally what we see happen is these naked bars wind up not getting filled within the day, and they wind up getting filled the following day. We've seen it happen 3 days out. 3 days out, where a very obvious naked bar situation winds up getting filled 3 days later. Now, you might think that that's not particularly predictive, and I would have to agree with you. It's that's very hard to trade because you've got to have the trend moving in your direction. Okay, the trend has got to be moving in your direction, so that's a key. But in most of these instances, the trend is already at play, and it's just working in your direction because of some kind of a retracement or a rebound, and you work it that way. But they're very effective. An excellent way to trade. I'm Rod Goosen, Spoon Man for Risk.